Hello. Welcome to our next chapter, that is your IND AS 105. IND AS 105 is about non-current assets held for sale and discontinued operation. So 105 talks about any non-current asset. That means when your long-term assets, you have now classified them as held for sale. So for this to be true, what would be called under IND AS 105? So for an asset must be available for immediate sale. It should be available for immediate sale in present condition. And two conditions are there. Assets should not be vital for entities' ongoing operation. That means the operation should not stop just because of sale of these assets, because otherwise it would come under discontinued operation. So for an asset to be available for immediate sale, asset should not be vital for the entity's ongoing operations. And second, assets should not be required to be refurbished before sale. That means it should not go major repairs before being sold. Because if it needs major repairs before it is sold, then in such a case, it is not ready for immediate sale. That means it will be ready for immediate sale only when the asset is actually ready to be sold. Yes, you can take it today. And second, if the sale must be highly probable, the sale must be highly probable. So how do I define, how do I decide whether the sale is highly probable or not? So it is based on certain factors. Your first factor is management must be committed to sell the asset. That means first is your intent. The intent must be clear that it is to sell. Second, a complete selling plan must be initiated actively. Just deciding that I want to sell is not enough. You'll also have to find buyers for the asset. You'll have to find brokers for it. So a complete selling plan must be in place and it should be initiated. Second, the sale price must be reasonable compared to the fair value. Say for example, the fair value is 100 and I want to sell it at 800. Of course, this asset will never be sold. So therefore, it should be reasonable. Next, transaction must be expected to be completed within 1 year. If I feel this is going to be, if this is going to take longer than 1 year, then it will not be considered as probable. And second, withdrawal from the plan is unlikely. That means it is not like a casual relationship that you once you get into and I can leave anytime I want to. So withdrawal from the plan is unlikely. Next, if an entity has committed to if an entity has committed to a plan involving loss of control of subsidiary, all assets and liabilities to be classified as held for sale. That means if the entity has committed to a plan for loss of control of subsidiary, if so earlier we had control and now maybe we are selling not the entire subsidiary but we are just going to lose control. Say for example, control was defined at 50% and we now have only 30%. That means we do not have control anymore. So therefore, all assets and liabilities will be classified as held for sale. Second, 1 year criteria can be ignored if the delay was caused beyond the control of entity. This 1 year that we studied over here, this can be ignored if it is not within control of entity. If it is not within control. Next, sale includes exchange of non-current assets for non-current assets. If I am giving you a non-current asset and in return I am getting a non-current asset, this will still be considered a sale. When exchange has commercial substance, this transaction shall have commercial substance. Next, if criteria of held for sale is met after the reporting period, that means if my reporting period ends on 31st March 2023, if these conditions are met after 31st March 23, but before the financial statements authorization but before the financial statements authorization date, that means if you remember post balance sheet items, so after the reporting date but before the financial statements authorization date, do not make any changes. That means we will make changes, we will do anything only and only if this is met before the reporting date. Otherwise, there will not be any changes. Asset where intention is to abandon or temporarily retire will not be considered as held for sale. If it is to abandon, that means I'm just going to leave it somewhere. I'm going to scrap it. Or temporary retire, that I'm not going to use it for some time. It will not be considered as held for sale. Depreciation to be stopped from the date it is categorized as held for sale. That means depreciation will be start from the date uh, it will stop when it is categorized as held for sale. That means once it is categorized as held for sale, we will no longer be giving any effect to P&L except your gain and loss. In case of discontinued operations, separate disclosure in P&L for any profit or loss to be made. So if there is any discontinued operations, you will also have to give a disclosure. You will also have to give a disclosure that this was my profit or loss because of these discontinued operations. And lastly, you will also be checking for impairment. Okay. Okay. Now comes your measurement part. So measurement, how will you measure an asset that is held for sale? So it will either be measured at your carrying value, that is your after applying all IND AS minus impairment. Okay, minus impairment basically after applying all IND AS, that means usually after this is all IND AS basically impairment. So you have after subtracting impairment, so your carrying value minus your impairment, or your fair value minus cost to sell on date of classification, whichever is lower. Okay, so this will be valued at your carrying amount, that is after checking it for impairment, and your fair value less cost to sell on the date of classification. Fair value is what the market is ready to pay, and cost to sell is whatever expense you will have to incur to sell it. Say for example, you have to sell it to another country. So in such a case, there will be transport charges, there will be any duties, any legal expenses. All of this will have to be subtracted to come to the correct value. Last is when an asset is no longer held for sale. Say for example, I had an asset, I classified it as held for sale, and now I do not classify it as held for sale. So in such a case, reclassify the asset to PP. Of course, it will be reclassified to PP at lower of A and B. What is your A and B? A is your carrying value on date of reclassification, considering the asset was never held for sale. You have to assume that the asset was never held for sale. Then what would have been the carrying amount? That is your A. B is the recoverable value on the date of classification. Recoverable value, whatever is your recoverable value on date of classification, whichever is lower, it will be recorded at this amount. Any difference in carrying value in books, any difference in the carrying value in books and lower of A and B, because the asset would be shown at some carrying value, that is it would be showing at this amount, this measurement that we saw, and now we are again changing the value. So whatever this change will be, this will be shown in gain loss on reclassification. Okay, and with this we are done with this IND AS, and I will see you in the next one, that is agriculture.